to happen that much faster. We now grasp, and I gather the latest news is that the Chinese have decided they're not going to continue with that circuit breaker policy. So there are some strange technical reasons why the Chinese stock market has behaved quite as scarily as it has.
Right. Brian, what do you see as the financial domino effect around the world of the circuit breakers, the suspensions of trading? The question that John raises, do they help calm things down when you close the Chinese stock market after just a half hour of trading, or does it just create pent-up demand to sell? Are we seeing a ripple effect from the uncertainty of that elsewhere in the world?
Well, yeah, as John pointed out, I mean, the Chinese stock market has literally almost no connection to the Chinese economy, and the Chinese stock market has even less direct connection to global stocks, really. But clearly what you're seeing here is a lot of volatility, a lot of concern about how the global economy will respond to a slowing China. And this is obviously a slowdown that the government is trying to manage on its own to create a more sustainable economy over the long term. But in the meantime, in part because China remains so much more opaque, really, than so many other countries. So it's hard to know always what policymakers are doing. These circuit breaker rules, and it's probably a good thing that they've decided to suspend that, also creates the perception of increased volatility. And now, of course, we're seeing the Dow drop today. And so, this is also coming on the heels, I think, of a lot of other issues with the global economy. A very tough year for emerging markets. You're seeing oil, go down below $35. So, these countries have been depending on China for growth, and I think the concern over what China's going to do in the future is just going to increase that volatility, really.
Listeners, any questions or comments about the Chinese stock market problems and its relation to ours, and also North Korea's nuclear test? We're not really sure whether it was a hydrogen bomb or an atomic bomb. We'll talk a little bit about the differences between the two and why that matters. But either of these two things on the table with Brian Walsh and John, authors from Time Magazine and the Financial Times, respectively. 212-433-WNYC, 212-433-9692. And John, just to stay on the China stocks for a minute, does China's history of currency manipulation play a role in any of this?
Yes. Bear in mind at the moment that the manipulation is actually working in a way that people in this country tend not quite to understand. It's effectively been pegged to the dollar for many years. It's been allowed in the last matter of years to appreciate very, very slowly against the dollar, but that has still ultimately meant that it's pegged to the dollar. For a number of years, that meant that it tied itself to a weak currency. The dollar had an extremely long, weak cycle going into the financial crisis. What causes the problems now is that China has tied itself to by far the strongest currency out there. The dollar has had a very strong run in recent years, and that begins to diminish its competitiveness. Now, you could argue, there are various arguments, what the official Chinese policy now is to maintain their currency stable against a basket of foreign currencies, not just the dollar. As the dollar continues to go up, that therefore means that the Chinese currency has to go down against the dollar. It's still, given how much inflation China has had over the last decade or so compared to the almost non-existent inflation that we've had in the States, there has actually been a very significant depreciation in the Chinese currency over that period. There was manipulation unquestionably was going on in a very aggressive way, and it had a lot to do with China's rise from a decade ago or so. But for the last few years, when the Chinese have intervened, it's actually been to push their currency up against the dollar. If the Chinese do nothing or don't do enough, as we've seen in the last few days, what the currency wants to do, given the current pressures on China, given the current attempts by money to leave China, what the currency actually wants to do is go down. So yes, the history of manipulation, this is all about the history of manipulation and the history of trying to move from a controlled currency to a market currency without suffering too much pain. But the manipulation in recent years hasn't worked the way that most people in this country, or most countries outside of China, assume that it has.
Brian Walsh, what's the latest you're seeing on the North Korea nuclear test? The last I looked, the United States was questioning whether it was really a hydrogen bomb, as North Korea claimed, as opposed to an atomic bomb. What's the best evidence, and why would it matter if it was one or the other?
Well, you're absolutely right. I mean, that's what the Americans are saying now, and the answer is we still don't know, really. Seismic tests can only tell you so much. We'll try to sample the air for elements of radioactivity, but that's going to take some time, I think, and that's only going to happen if you have enough out there to actually test. Best of all would be have some kind of intelligence leak, but that's not going to happen in North Korea either. So it matters because you're talking about a quantitative leap in their capacity if they're able to actually to use a hydrogen bomb. But at the same time, and that also means they get closer to being able to miniaturize a warhead, which then puts it, in greater danger of missiles that could actually threaten the United States. What ultimately matters here is that they're clearly not dissuaded from pursuing their nuclear program, and they're making that very clear by doing this test, very much in the face of opposition from their number one ally, China. So what that's saying is that, even while the Obama administration has been successful in trying to curb Iran's nuclear program, North Korea has been going right ahead, and that's going to be very, very worrying given how little we still know about the new leader.
Could it be that North Korea sees that sanctions are being lifted on Iran for promising not to develop its nuclear program past a certain point, and it wants in on the action?
It's possible, but you're talking about two countries that are very different. I mean, Iran is already much more closely connected to the global economy than North Korea is. North Korea is a hermit state, and I think what they're doing really has more to do, perhaps, with shoring up domestic support within the army, for Kim himself, but also I think for just making it clear that they're not willing to back down to the U.S. So it's hard to see whether, and we've not been successful over the past couple decades in trying really to deal with this regime or the previous regime in any way that's almost rational. So it's going to be very hard without the real help of China. And while China is obviously unhappy with what North Korea is doing, they show no real willingness to take the kind of full steps you need, presumably, to deter Pyongyang from going forward with this.
You mentioned that China opposes these North Korean nuclear tests, but here's what Republican presidential hopeful Donald Trump had to say about China's role in reigning in North Korea during an interview on CNN yesterday.
And China can come out and, frankly, they will, they say they don't have that much control over North Korea. They have total control, because without China, they wouldn't be able to eat. So China has to get involved, and China should solve that problem, and we should put pressure on China to solve the problem. And if they don't solve that problem, we should be very tough on them with trade, meaning start charging them tax or start cutting them off. You'd have China collapse in about 2 minutes.
Donald Trump. Now, understanding, Brian, that Trump says things that either are or aren't connected to reality, what do you make of his proposal there and, the seriousness of the premise?
Well, he's not wrong that China does have, immense influence over North Korea, but the problem is that, that influence also comes with a price for China. They know that if they really were to get tough with North Korea, there's a potential risk to them as well. If North Korea collapses, they're looking at potentially millions of refugees coming across the border. They're looking at, potentially, who knows, military action, again, right on their border. It's not, they're obviously much closer to North Korea than we are. How much influence we can have over the Chinese for them to influence North Korea, that is less true, I think. I mean, a whole lot of problems would come around with doing that kind of tough policy on China in an effort to deal with North Korea. We really just have to hope, I think, in some ways, and use some kind of influence to get the Chinese to realize over time that the price of being an ally to North Korea is greater than any benefit they have.
Trump talks about China collapsing in 2 minutes. It would take a little more than that, right?
I think it would take a lot more than that, yeah.
John in Amityville, you're on WNYC. Hi, John.
Hey, good morning, Brian. Pleasure to speak to you. I was curious as to why our stock market is so affected by what happens in China.
John, you want to take that?
Right. Yes. I mean, China at the moment is the world's second largest economy, and it's at the margin responsible for most of the world's growth. Far more far greater in absolute terms increase in GDP in China than there is here in the States, even though the States is still a far bigger economy. So that part matters greatly. If you take a look at the S&P 500, many of those those companies in the S&P depend to a great extent on overseas earnings. There's plenty of multinationals in there. Those earnings ultimately in many cases come from China or from countries whose economies are very much dependent on selling things to China. So there's no question that trouble for China should be a problem for us. I think the other critical point to bear in mind here is that markets hate, it's a cliche that markets hate uncertainty. What they really hate is opacity, lack of information. There's a big ripple around the markets this week because a big hedge fund manager decided he was going to close his fund and published an open letter basically saying the reason I'm closing is because I need to, if I want to trade markets effectively, I need to know what's going on in China and also India, but particularly China. I don't trust the data, which means that if I'm going to be trying to trade, I'm going to have to be making guesswork, and that's not good enough. Now, because people aren't sure that they trust the official data in China, they may well put too much emphasis on the data that they really can see, which is clear and public, such as share prices and the currency. The share prices might well be moving for merely technical factors, but if it's a symptom of something going wrong in China, or could be a symptom of something going wrong in China, if it's a symptom of how the Chinese authorities are going to behave and whether they might be moving to a policy that's less advantageous for US companies, plainly you have the risk of a big overreaction in US stocks. Frankly, I'm surprised we haven't had a bigger fall in US stocks. I'm quite impressed by how calmly, relative to what it could have been, that the American market is dealing with this.
And a follow-up from a listener on Twitter who writes, if Chinese stock exchange is not tied to their economy, as you say, how does it actually work?
It works like most stock exchanges. People buy and sell stocks in it, and in the short run, most stock exchanges aren't linked to the economy. Most stock exchanges in the long run, including this one, you do see a clear correlation with economic growth over the very long term. In China, it's a younger stock market, and so far there really is no correlation like that at all. People get excited about new companies that don't have much earnings. People are very unimpressed by the companies that are still the biggest companies for the most part in China, which are big banks with problems about credit, big state-owned enterprises in the sectors that traditionally dominate the economy, and so you have this very strange process where ultimately we're led by fear and greed and hope, and much less by any clear underlying economic fundamentals. It's not that different from other stock markets. It's just much less mature, and you have an economy that is that much harder to read.
Speaking of detached from the economy, stock markets, how do you say credit default swaps in Chinese? Never mind. Tony in Fort Lee, you're on WNYC. Hi, Tony.
Good morning, gentlemen. I reside in a largely Korean community here in Fort Lee, and most of my friends are Korean, and they would tell you, many of them, that the very existence of North Korea benefits America and China. What we're seeing now in the news is just theater, that America has an interest to keep the boogeyman alive, because if North Korea and South Korea join, there's no more need for America to be on the peninsula.